So day rate contractor mortgages, how do they work? So day rate contractor mortgages work in a different way to standard employed mortgages or self-employed mortgages. So with self-employed mortgages, what you find is people really need a year at least, in a lot of cases, 2 years self-employed books. So for example, your SA 302s, your tax calculations. And if you're a limited company owner, you might need your limited company accounts as well as your SA 302s, tax calculations and tax year overviews. Now with these sort of cases, people who are contractors, they are actually working for one company rather than working in a, say, more high risk building job, for example, and that building job is with various contractors. Lenders need to see a track record of that to understand that job a little bit better. But if you're working with a contractor, so that contractor's been paying you the same day rate, say £120 a day, £220 a day, 240, we see quite common figures. Those sort of figures are then multiplied by the days you work times by 48, 49, 50 weeks of the year. So if you are earning £240 a day, for example, that 240, if you times that by 5, times that by 48, which is basically the weeks of the year that you work minus holidays normally, that would equals 57,600. So it does differ per lender. Not every lender is the same. Some lenders, like I said, will do 48, others will do the full amount of weeks, so 52 weeks of the year. They can take your day rate as the figure they use to get your affordability, to get yourself a good mortgage and before that year is up. So as long as you've got a track record, you've been in the same line of work for quite a while now, then a lot of the lenders will allow you to get a mortgage. If you haven't, then you may be looking down the self-employed route. Anyway, that's how day rate contractor mortgages work. So please like, subscribe, leave a comment, and there'll be more useful mortgage insights to come.